And we are back from the PDAC, back to regular programming here at Kitco News. We're going to start it off with Peter Hug and this week's For Pete's Sake coming up. And with me now is Peter Hug. Pete, thanks for joining me today.
You're welcome, Alex.
All right, Peter, let's start off with gold's charge this morning up past that critical level of $13.55. Now, what's driven gold to these levels today?
Yeah, I think gold is a safe haven play. I mean, we're seeing news overnight that Russian troops are still continuing to mass on the Ukrainian border. So I think most of the gold move is directly related to the Ukraine. It's a flight to safety type of investment, mostly coming out of the European market. The pop-up through the 1355 level happened initially in the Far East, but then Europe carried the momentum, and we see it now up in the high 1360s.
All right, Peter, let's switch it over to silver now. I mean, we see gold having good price movements. PGMs are doing the same, but silver seems to be lagging behind a bit. Now, how come the white metal hasn't caught fire just yet?
Well, I think silver is sort of following into the camp of the industrial complex right now. Copper has just been decimated over the past couple of weeks, primarily on the China story of much slower economic growth there, and prospects not looking too bright in the short term for China, which is having a fairly significant impact on the industrial metals. And in that context, silver, albeit sort of the little sister of gold in the precious metal sector, does have industrial applications. And, the feeling is with China's slowing, the demand for industrial metals will lessen, and that's obviously had an impact on the silver price as well.
All right, Peter, we'll get back to that gold-silver ratio in a bit, but now I want to change it over to the PGMs. Now, there's issues in South Africa, issues obviously in Russia with the Ukraine. Now, I mean, obviously platinum goes with South Africa, a huge supplier, Russia hand in hand with palladium. Both these metals are doing very well right now with the strikes in South Africa and the tensions in Russia. I mean, what are your thoughts right now?
Well, again, the South African story continues. The strikes are still ongoing. So far, they have not impacted any of the contractual obligations from the South African mines. So that's still a watch story. See if it develops into anything more significant from the perspective of violence. I suspect, though, that the South African story will probably mitigate itself, and there'll be some resolution. I would suspect probably by within the next month. The palladium has outperformed the platinum market because, again, of the Russian situation, and it's a perceived situation. Between the two metals, platinum and palladium, Russia accounts for about 75% of the world's production of palladium. There is some fear that the Western sanctions against Russia with their actions against the Ukraine may create Russian reprimand in the context of withholding strategic metals from the market, and some supplies of palladium being reduced from the Russian side. There was a short squeeze on palladium on that supply issue, and this heightened tension between Russia and the Ukraine has added to that angst. And the palladium market is experiencing some serious short covering, and that's why you're seeing palladium outperforming platinum.
All right, Peter, what can we expect from gold coming up this week?
You've got to be in the gold market. I mean, as I've been saying over the past little while, that you've got to bid on this gold market because of the geopolitical risks that are occurring in Europe. You take Ukraine out of the picture, though, this market was looking heavy, and I was suspecting that the easiest path on the metals would have been down. But as long as the geopolitical risk continues between Russia and the Ukraine, and potential conflagration over there, it's difficult to be short the gold market. Should there be a reasonable resolution in the Ukraine, though, I think gold is heavy up at these levels. I don't see any fundamental reasons for gold to be here. But again, you can't short a market into what's going on in the European theater right now. And the 1355 breach, as I suspected, when that occurred, created some technical short covering, and that's why you have this extra $15 pop this morning. But overall, the market doesn't look constructive on gold, but that certainly doesn't mean we can't see gold well north of 1,400 if the situation gets considerably worse in Europe.
Okay, Peter, we're going to take it home with that gold to silver ratio. We're going to dip into the feedback email today. We have a question. Has Peter revised his silver to gold ratios for buy and sell opportunities? Well, Peter, have you?
Well, I don't have a set parameter in my mind. I sort of look at the market and then, make a sort of a value judgment when I want to, especially when I'm playing ratios of one metal to another. A ways back, I suggested silver at a 65 to 1 ratio was a little toppy, and a trader's trade would have been to buy silver and short gold with a 60 to 1 target, which we realized a couple of weeks later. The ratio this morning is again back at 65 to 1. Again, this is a story that gold is moving predominantly on the Ukraine issue. Silver is being affected by the industrial demand slowdown coming out of China. However, if I think the Ukraine situation resolves itself, I still think the play at current 65 to 1 is worth a shot. By that I mean selling gold here and buying silver on the ratio, looking for a retracement back, probably at least to the 62 level in the short term.
Thanks for that, Peter.
You're welcome.
And thanks for watching this edition of For Pete's Sake. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com, or you can find me on Twitter at Alex_Letourneau. Have a good one.